Shares of TiVo surged to a more than 5-year high earlier this month after a federal judge ordered Dish Networks and EchoStar to pay nearly $200 million for infringing TiVo's patents. Here to talk about what that ruling means for TiVo's digital recording business is a Bloomberg Best TiVo analyst, ranked #1 by Bloomberg's absolute return ranking for the past year on TiVo shares, Todd Mitchell of Kaulman Bros. Todd, glad you could join us this morning. A key court ruling, obviously. But walk us through what this means for TiVo right now, because the dispute continues, obviously. EchoStar, Dish doing their best to try and further their intentions. How does TiVo counter this?
I think that this case clearly puts Dish on the defensive. And I think with reasonable certainty that TiVo is going to be able to collect some sort of licensing revenue from Dish. The question is, does Dish license them for all of their DVRs going forward, or does TiVo just go after the ones that are in the installed base that are infringed? And the second question, which is more important, is does this enable TiVo to go after other operators who they think are infringing upon their DVR patents?
What do you think?
It's clear to me that Dish was infringing. At one point, TiVo pitched Dish and DirecTV a DVR deal. It seems that DirecTV took them up on the deal and Dish took their technology. It is less clear that TiVo's patents can be extrapolated to all DVRs. I think that will have to be resolved either in further court cases with other operators, or TiVo will go after them and try to make constructive arrangements with them, licensing arrangements.
Now, when you say other DVRs, you mean the boxes that some Comcast or Time Warner subscribers may have?
Exactly. Comcast, Cox, and DirecTV already have deals with TiVo. Their deals are such that, their subscribers can opt into TiVo. I think TiVo will try to make those type of arrangements going forward where they're an option, rather than to try to sort of hold up the other operators, such as Time Warner, and risk more litigation.
Is it a complicated strategy for TiVo to navigate right now, though, because, as you point out, it's not really all that cut and dry?
This has been, Dish is a tenacious litigator, and this has taken TiVo far longer than I think that they hoped it would to resolve. And essentially, it's put a lot of their licensing strategy on hold until they can resolve this, because it really dictates what's the price going forward for TiVo's technology.
Okay, given those concerns, though, given the fact that Dish, as you point out, is a very litigious company, and given the fact that TiVo has yet to make some decisions about how it wants to proceed, is the stock fairly valued?
We have the stock rated to buy. We have about a $12 price target. Frankly, on this one, I've been keeping my price target pretty close to the current events. I think TiVo is interesting at these levels on fundamentals and on a risk-based weighted basis for going forward, but it's surely not a sure thing at these points. So we are keeping our price target kind of close in, although I'm biased to the upside.
Okay, now what are the risks for TiVo investors right now?
I think the risk for this is that Dish will get some sort of appeal. I think that's highly unlikely. If you look at some of the court work that the judge in the case has done, he's done a lot of work on it has to stay in my venue, and that there is no reason for an appeal for this case.
Now, what is the most aggressive thing they could possibly do, and how could it backfire?
For TiVo? For TiVo? Basically, I think that they could go and try to sue other operators before this case is resolved. I think they really need to get this case set in as a precedent, and I think they have been playing it pretty close to the vest.
All right, Todd, thank you so very much for joining us. Todd Mitchell from Kaulman Bros. Here to talk about TiVo, obviously Dish and EchoStar as well.
Thank you.
Great to have you.